and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets are set to round off a strong week. The Nifty gains for the 7th straight day and the Sensex is set for its biggest winning streak in 2 months. M&M and Uber will launch electric taxis in Delhi and Hyderabad over the next few months. Reliance Jio starts off with a 14% market share in India's total telecom revenue pie, shows TRI data. And CLSA's Chris Wood says India's affordable housing sector is one of the most straightforward bull stories in Asia.
Well, those comments certainly seem to be rubbing off on our markets because we are trading close to the day's highs in the session today. So 0.5% up for the Nifty. Volumes at par have slightly picked up as well. The market width is not looking too bad either. The mid caps and the small caps will come up on your screen, and the intraday charts will also, or rather the advanced decline ratio will also come up on your screen, and you'll see what I'm talking about. The small cap index has inched up further during the course of the day, and the market breadth has stayed stable. Remember, yesterday at the same time, these converged. In today's session, not so much. So the broader markets too looking fairly exciting. Now let's get the heat map and you will see what I'm talking about. The big boys are participating for yet another day. Infosys leading the pack, another 2.5% for that one. Reliance is giving company. ITC is up about 1% as well. So there are certain heavyweights which seem to be doing rather well for themselves. We've been talking about this for the last 2 days, that banks need to participate for this rally to do further. Well, let me tell you, it's not that banks haven't participated, but they are not leading the rally today either. It is Reliance, Infosys to an extent in terms of heavyweights, and ITC which is participating. So we are moving up despite the fact that there is no big participation or major participation coming in from the banking space. In fact, ICICI Bank, if I'm not wrong, somewhere on the losers list, yes, down about 0.5%. So not too many losers, enough and more gainers. Lastly, just put up the volume picture and show you what's happening in terms of the volumes as well, because at noon when I was checking, the volumes were subpar, and right now too, the volumes are pretty thin. But let's wait and watch as we head closer to the expiry. Maybe these would pick up as well. In today's session though, both the cash market, the NSE cash and the NSE F&O volumes, much lower than what you see on a standard day. Pradeep, what about the broader markets though? Those are fairly active.
Yeah, definitely. And like you mentioned, the Nifty and Bank Nifty have been going sideways. Nifty has only today managed to move above last week's high. But, the stocks that I have picked up, for example, Future Retail, you look at the move, through the week, Future Retail kept moving up at least for 2 to 3 sessions. Similarly, there are other names like Quest Corp, for example, where a lot of developments happened. They acquired something, stake got sold, finally up 7.5% today. But again, if you look at the weekly movement, this was a consistent performer. Praj Industries remained a consistent performer, and also Jacob, barring one session when it fell by around 10-12%, this one kept moving up and is hitting new highs, as you can see it now. Also, another favorite story in today's market, as we can figure out, is probably the housing and related stocks. So you have Puravankara logged at the upper circuit, and also you have HSIL, which is doing well. Career Point and MT Educare, these two education stocks are also buzzing ahead of Career Point number, interestingly. Navneet.
Well, Pradeep, what a day for the markets, and what a day to close this week as well. If somebody was watching the options data in the morning, clearly it was indicating that the bulls were fighting for that 10,400 mark, because the 10,400 strike just in that 1 hour of trade in the morning had added almost 10 lakh shares, and now it's added almost 22 lakh shares, and even the 10,300, which so far has been adding a lot of open interest addition. Put writers have once again seen almost addition of closer to 14 lakh shares. In terms of call strike, the 10,400, that's seen a bit of addition of almost 2.5 lakh shares. So clearly it's telling you, going into the expiry week next week, expect that range in Nifty to be 10,300 to about 10,500 on the upside. But we did breach the 10,400 mark just briefly today in the intraday session. The two stocks which I want to highlight, one of them is Syndicate Bank. The stock has touched its 52-week high in today's trade, and clearly there is this pocket of mid-cap PSU banking space which is buzzing in trade, and look at that, 16% higher in terms of open interest addition. Even if you look at the cash side data of it, there has been buying which has come in on account of high volumes today on Syndicate Bank, so do watch out for the delivery data as well. The other stock is V-Guard. That too has touched its 52-week high today. It's gone up on heavy volumes on the cash side, and the futures are also seeing long positions coming about as the open interest has surged nearly 16%. And And clearly, Neeraj, Nifty's broken that pattern which we were seeing in the last 3 days. It was not able to sustain the opening highs. So that pattern has been broken today, which is a positive sign.
Which is a pretty important point out there, yes. Let's see if we manage to close at these levels, or whether we succumb to some bit of selling. An hour and a half of trade left. But it's not just Indian markets which are in news, right? The Chinese markets tumbled a day before yesterday. Yesterday too, they were a bit soft. In today's session, it's a separate thing altogether. There's a bit of a yield uptick there. Our markets and our bond yields too showed a bit of an uptick in trade yesterday. So lots happening within the fixed income pocket as well. But let's talk about what's the meaning of all of this with a very special global voice, Mark Matthews. He's head of Asia Research at Bank Julius Baer, joins us right now on the show. Mark, always a pleasure chatting with you. Thanks so much for taking the time out and joining us today on such short notice. What's happening? Is it fixed income markets and the flows there which are having a bearing on how people are viewing at risk and equity markets thereof? Because we saw an example of this in China day before yesterday and yesterday. Indian markets too, the yields have moved up a little bit post this upgrade that came in and the bit of a correction that we saw in the yields. They are back to square one.
Well, I think you're right to say that what's happening in the fixed income market is having an impact in stocks, but there's so many stories flying around. So the Fed minutes earlier this week showed they were worried about inflation being too low, and that would, suggest that they won't hike as much as we thought they would next year. But on the other hand, in China, you've had interest rates moving up. 10-year bond went from about 3.6 to 4% over the last 2 months. And I don't know why, but for whatever reason, yesterday, the market chose to care about that. China, Japan, a lot of these Asian markets, they do tend to be quite panicky and reactive once in a while. But you point out that the sell-off didn't continue today. And I actually kind of thought it would, so that's nice to see. But I also thought that it wouldn't go down much more, maybe another 3%. Markets are generally bullish, in my opinion, because the global economy is good, but central banks are too scared to raise rates very much.
Mark, I have two questions rolled into one. As we hit the year end, and I'm sure we'll have an interaction with you before the year end as well. Do you believe there could be a bit of a drawdown in equities by and large because of the profits that by and large funds would be sitting on across the world, and EMs in particular? That's part one of my question. Part two of my question again is related to India and this whole talk of an upgrade. I mean, we've got an upgrade from Moody's. There's a lot of talk about an S&P change of outlook or a change of rating into India coming in as well. How important do you think would it be from an equity investor's perspective?
My feeling is that we're actually more likely to see the market rise into the end of the year, simply because when you do have very strong years, the finish is also generally very strong. I don't know why, but people feel good about things. Fund managers like to try to mark up prices to make the close look even better. Seasonally, the best time to be invested is November and December, January, February, and March. Those are the 6 best months of the year if you look back in history. And the irony is that we already had 6 very good months from May to October, which is the famous sell in May, go away period. So you might think we already baked all the good performance for the end of the year and the beginning of the year into the summer. But in fact, if you go back and look, when you do have a strong summer, typically you'll also have a very strong November to April period. So I don't see a sell-off coming. I wish there would be one, because I don't like it when the market goes up forever and ever. You do need to settle down. Anyway, the second part of your question was on the credit rating agencies. I don't mean to belittle them in any way. I have great respect for them, but I've never found that their changes correlate very much to equity markets. And I think the simple reason for that is the credit rating agencies look at coincident data. They're not looking at forward data. And so they're reacting to what has already happened. And what has already happened, we tend to already know about. So, I don't see why we should have any big move on the back of that.
Mm-hmm. If you look at the FII's behavior so far, Mark, we have seen that, in most of the 2017 so far, they have been preferring the northern part of Asia over the southern part, where India also falls. Now, do you think, could it really change for the remaining of these positive months that you're talking about, November, December, until February?
I think it already did change. I think it changed back when the public sector bank recapitalization was announced, and there's been about $3.7 billion of foreign money that's gone into the Indian stock market since then. So it's really a tale of two periods in India. Before the recap was announced, foreigners were selling, and after that, they started buying. And I tend to be in line with the consensus. I think that the public sector banks are a buy on any dip because they will be recapitalized and therefore they'll do more business. And I think they're still way below their previous highs and they're not expensive. So that makes sense to me.
In fact, what's curious, with the bank recapitalization, the Indian markets, especially the bond players, are kind of concerned about, how really to discount this entire amount. They believe that, technically you may say whatever, but it's actually adding to the fiscal deficit, and our bond yields have inched towards 7% if you look at 10-year bond. So Indian markets or players are kind of worried, but most of the voices that we get from overseas like yours is actually positive and not really concerned about deficit or bond yields or interest rates. If you could just explain to that.
I can't speak for the others because I don't know what they're thinking, but what I think is that I would just stick with the big three because the big three are definitely going to get most of the money and they've got the power in their brand names to get it. They've already started road shows. So SBI, Punjab National Bank, Bank of Baroda, those companies will be recapitalized and be able to do more business. And I think the benefit of that far outweighs for their own share prices, whatever the increase in the fiscal deficit may be.
Mark, where does India stand in terms of fund flows in the Asian region as of now? Because we've not seen that brunt of flows even post the Moody's upgrade.
I'm sorry, I'm not aware of the most recent numbers on India. I can't comment, I apologize.
Mm-hmm. But as we just mentioned, you said that at least recently, at least in the month of November, FIIs have turned positive and you think they will probably continue to put more money in. Where we started the discussion, what happened in China recently. Do you think this will easily pass and it won't really have any impact on the rest of Asia or the view towards the Asian markets in general?
I think clearly things are running very hot all over the world right now, including in China. I do think there's definitely signs of froth in the markets. So in India, for example, if you look at the leverage in single stock positions, it's gone from $6 billion to $9.2 billion in the last few months. Typically, you never go above $8 billion. Most of those are small and mid caps. So there's absolutely a lot of froth in the small and mid cap space, and I would not argue owning it. And in China as well, there was a slew of internet IPOs over the last 2 weeks that were hundreds of times oversubscribed. The biggest one was a spin-off from Tencent called China Literature. That was 1,000 times oversubscribed for the retail tranche. And so, these are all signs, I think, of froth. But if you stick with, in my opinion, quality, value, good fundamental stories like the PSU banks, then you'll make money.
Okay, just one last question. There are two important meetings coming up, the OPEC, where probably the production cut will be extended, and then the Fed meet, where we'll most likely get a quarter percentage point hike. How do you think, if at all, it will affect the markets like India?
Well, I think where you can start to worry for India is if oil goes above 60. Where is it now? I'm not sure. But anyway, people would start to worry if oil keeps on climbing and climbing, and the OPEC meeting will provide some guidance on that, of course. I expect they will extend their production cuts. But then with the Federal Reserve, it's a done deal they're going to raise. But the closer thing to watch will be if there are dissenters. And dissenter is somebody who says, no, I don't agree. I'm not voting in favor of a rate hike. So if you look very closely, there are I'm thinking of Brainard, I'm thinking of Evans, I'm thinking of Kashkari. There are three people who have been worried about inflation being too low and raising rates too quickly. And if we see they actually dissent on the vote, then I think, you might start to wonder about the trajectory for next year. So that would be something to watch.
Thanks a lot, Mark, for taking time out for us. That was Mark Matthews of Bank Julius Baers. And moving on to the hotly debated topic of the day, we have been talking about the IBC ordinance, and now MS Sahu, chairperson of the Insolvency and Bankruptcy Board, is joining us from Delhi. Mr. Sahu, thanks a lot for taking time out for us. We have been debating this issue. If you could throw some light on how did we really get a really strict or a harsh version of what we were actually expecting. The way promoters are treated, probably most of the commentators we have spoken to were expecting, some leeway for them to get an opportunity and rebid.
Okay, let me make it clear at the beginning that it is not an issue between promoter or non-promoter. As you see the draft ordinance, it talks about the resolution applicant, or promoters of the resolution applicant, or related parties of the resolution applicant. So the track record of only this sort of persons is being asked, not of the promoters, but it is asked only when promoters are also resolution applicants. So it is not a standard which is specified only for promoters. It is a standard applicable for everybody. The objective is that people with clear antecedents come and take over the responsibility of a corporate which is being resolved with the sole objective of maximization of value of assets as provided in the code. So the amendment in fact makes the committee of creditors, it rather I would say sensitizes the committee of creditors about their responsibilities. It says that please approve a resolution plan which is viable, feasible, which does not come up again after 6 months or 1 year for a resolution process. That means plan must be really grounded on actual numbers, what can actually be translated. The second is it enables the resolution professional with the approval of a committee of creditors to specify the eligibility criteria, keeping in view the complexities, scale of operations, because we would not expect a person who has about, let's say, 1,000 rupees to submit a resolution plan for a resolution of a 5,000 crore company. So that kind of eligibility norms professionally, whatever appropriate given the complexities and size of the corporate debtor, that will be specified with the approval of the committee of creditors. And the third aspect is the credibility of the resolution applicant. They must have a clean track record, they must not have been a willful defaulter, they must not have been debarred from trading in securities or accessing securities market, or disqualified to act as a director under Companies Act. And note that all these requirements apply to Indians as well as the people who from outside India want to bid or offer a resolution plan. They also need to have a similar credentials. So the objective is that we should get a professionally drawn up, sound, economically, financially sound resolution plan. The resolution applicant has the capability and capacity really to translate resolution plan into action. And they are credible people, they are deserving people. Otherwise, the objective of code would not be achieved.
It's valid, but most experts thought that it was taken a bit too far and it excludes too many people because, even the guarantor and kind of promoters, related parties, the ambit has really been widened under the amendments.
Yeah, it has not really been widened. The objective is that clean, credible people should come. If that clean, credible means a bigger number, let it be. Because just to enable some people, we can't sacrifice the sole objective of the code. We have reached a situation where we are looking somehow to rescue a viable entity, resurrect a company which is not doing well today. But we can't put it in the hands of a person who is not having a track record of doing such things.
But this whole idea of putting a kind of cutoff for 1 year or beyond, how do you really think it was arrived at? I mean, how did we decide that 1 year is the limit beyond which somebody should be debarred? Because 1 year is probably too short a period. There could be some genuine reasons, some disruptions due to which somebody may be in default for a year.
I would not be able to explain what are the considerations that went into making this ordinance. But whether you call it 1 year, 3 years, there has to be a cutoff. For you, 3 years could be reasonable. For somebody, it could be reasonable. 1 year is reasonable. But as long as it is giving an opportunity to repay the entire amount and then submit the resolution plan, it's not actually clearly debarring somebody just because the default continued 1 year. There is a way to address that position.
Do you think it would be feasible for a promoter really to clear the outstanding dues and then come and apply?
No, the objective is not to enable one set of people. Objective is have a competitive market of the capable people, credible people. So we can't sacrifice the basic objective of the code, that is resolution. If the company ends up, company as you know is a legal person that exists in perpetuity. So we can't compromise its life just because we would like to accommodate some set of people. The objective requires the code, the amendment does whatever is required to achieve the objectives of the code.
Okay. Well, that point well taken. But Mr. Sahu, this code will have to kind of pass the parliament someday, and maybe it could be challenged in the court of law as well. Do you think it will require some cleanup before the final nod comes from the parliament?
No, I would not be able to comment on that, but just because a matter is likely to go through a court process, that should not deter the policy makers or government from taking an appropriate decision. And it's not that court is an adversary of government. Court, government, everybody wants work with a public objective. If there is a deficiency in the law, it is rightful that court guides us. So we should be prepared. If we have not done a work properly, we will be guided, take the direction of the honorable court. But the possibility that somebody could be challenged, that should not come on the way of doing good things. The IBC itself has been challenged at several places before honorable high courts and number of high courts as well as the Supreme Court. But they have seen through the reasoning, the rationale for IBC. So I am sure if this is also challenged, courts are unlikely to take an adverse view if things are explained properly to the court.
That is true, as you always maintain that challenges there could be a challenge in the court of law, but the code is solid enough. But one last question, if you could update us on the status of some of these cases now, and what would be the kind of timeline, because government definitely wants a quick resolution. That is why they have not waited for Parliament to clear, but instead they have enacted an ordinance. So what kind of time frame should we now look at when we'll start seeing the final resolution of some of these cases?
The normal timeline is 180 days, which is extendable by another 90 days. In course of time, when the systems get standardized, processes become automated, and we have a reasonable expertise, even 180 days will be too long. But as on date, the Honorable Tribunal has been granting additional 90 days time wherever the stakeholders find any difficulty. Today we have about 400 transactions on, and some of them have been closed. At least about a dozen of them have been closed either by resolution or by proceeding to the next stage, liquidation. If we are talking about these 12 accounts, I think none of them has yet reached this stage of 180 days. This new ordinance says that if at all there is an application which has come from an ineligible person, then only that application will be rejected. And in that case, even after rejection, if there is no eligible plan, in that case a fresh applications, fresh resolution plans will be invited. But as I told, since it is yet to approach 180 days, and there is an additional possibility of getting another 90 days, I don't see that a timeline is coming on the way.
So thanks a lot for taking time out for us. And moving on to one of the buzzing stocks of the day, HSIL, Navneet.
Well, that's right. HSIL is the stock which has been in focus, and the stock has gained actually for the last 8 days in a row, and today it's trading with gains of as much as closer to 6%. Well, this is the stock which was also impacted because of the tinkering in the GST rates. We'll get a better view on that. Joining us now on the show is Mr. Sandeep Sikka, who's the CFO at HSIL, who's joining us on the phone line right now. Mr. Sikka, good afternoon to you, and thanks a lot for joining us today on Bloomberg Queen. First up, I just want your comments on with the recent tinkering of the GST rates that has taken place. How has that impacted your company?
So if you see the GST rates on the sanitary ware was 28%, which has now been brought down to 18%. Definitely the customer will benefit a lot out of it, point number one. Secondly, if you see the sanitary ware industry, which is around 4,500 crore industry, around 40% of that industry is unorganized sector. And we expect with the duty reduction, the pricing gap of the products in the market from organized to unorganized will reduce, and it should give a boost to the growth of organized and the branded market as we move forward.
Already passed on that impact to the end consumer, Mr. Sikka?
Yes, we have passed on.
So what's the kind of price reduction that you've taken?
So it depends on SKU to SKU, ranging between 3 to 4% in some cases, and some maybe slightly higher. That depends on SKU to SKU.
Okay, could you also talk to us a little bit on the demerger that has been announced by you? You're looking to demerge the consumer and building products business. What is the reason for the same? What kind of value unlocking are you looking at from this demerger?
I have to just explain a background to you on this. So if you see HSIL today, before the demerger was approved by the board, was into 4 key segments. One was the building product segment, wherein our business is sanitary ware faucets. The second is the consumer products, wherein within 2 years of operations, we have now retail outlets, around 5,500 retail touch points, and we are selling kitchen hoods and hobs, water heaters, water purifiers, air coolers, products like this into this market. The third segment is the retail segment, wherein we sell, furniture to our retail stores under the brand name called Evoke. And the fourth business we had internally was the glass packaging and the PET packaging business, wherein we used to supply glass bottles and the PET bottles to various liquor companies, pharmaceutical, food companies. So as we were discussing, internally and also with the various subset of investors, various investors had, various sort of interests. Like somebody would not like to invest into the packaging, which is a B2B business, but he was very interested in investing into the retail part of it or the B2C part of it. The whole genesis the premise on which this demerger has happened is that 80 to 90% of business activities internally is focused on, creating new products, developing new products, designing new products, branding them, marketing them, selling them, giving after-sales service, and other go-to-market, the thing. So management took a call that we should segregate all the consumer-facing business from the manufacturing businesses so that, we have two verticals. So one can excel in the manufacturing and other can excel in the consumer businesses. Now, coming to the point of unlocking of value, definitely this should unlock a lot of value because the consumer-facing business wherein the brand is also there, the entire subchain of market, go-to-market channel is there, would now operate at a very low capital and will have a very high return on capital employed and also high return on net worth. So it should fetch, better multiples in the market as compared to the composite business. And that should be reflected in the unlocking of value as we move forward.
So, Mr. Sikka, if you just go by what the street seems to be working with for both of your businesses, I mean, one, actually, if you can give us some timelines about when would this finally get consummated by, and two, the consolidated top line for both the consumer business or the combined top line of both the consumer business as well as the manufacturing and the glassware business, you reckon it will be safe to assume that you would probably do northwards of about 2,100 crores over the next couple of years?
If we talk in terms of timelines on the completion of this, so yesterday we have filed with stock exchanges after the approval from board on 10th of November. And we expect the whole process should ideally get completed, which is the NCLT process within next 6 to 7 months. Now coming to the top line, so when we say all the consumer-facing businesses, which is consumer product division or our retail division or the building product division, and if we try to dissect it last year, so this should have an ideally a turnover of somewhere around 1,300 to 1,400 crores based on March 17 financials. And a similar sort of turnover would also come from the residual HSIL in that format.
No, sorry, I'm missing you. You are saying 1,300 to 1,400 crores as of March 17 for the consumer business, right?
For the consumer vertical, which includes consumer, Evoke, as well as the building products.
Okay, what about the other one, which is the manufacturing in the glassware business?
So manufacturing would have a turnover of somewhere around 1,200 to 1,300 also equivalent. The only point you have to see here is that post demerger, although the scheme is effective prospectively, that means this demerger is effective 1st April 2018, not 1st April 2017. But I am giving you a reference figure of 2017 for comparative purposes. So all the manufacturing which is done by the sanitary plant and the faucet plant will be sold to the consumer vertical. So that is the additional delta of incremental sale which will get recorded, which currently gets knocked off in the within the intercompany sales. So that the residual HSIL should also have a sales of somewhere around 1,400 crores.
Okay, fair call.
Mr. Sikka, before we let you go, the September quarter earnings did not look good. There was some increase in the power and fuel prices. The packaging business suffered because of the liquor ban due to the highway issue which came about. Just want to check, is the second half looking better? What's the condition on ground today?
So if I give you a brief profile of our earnings on quarter two, so our building products grew by around 6.7% and with the EBIT growth of around 8.4%. On the consumer product, it's a new business. We are still investing into that business at the EBITDA level, but it demonstrated a sales growth of around 93% quarter on quarter, and with last 2 years annual CAGRs of 90% plus. The retail business grew by around 11.5%, which is the furniture business. The only point where we suffered was the glass business, because glass, if you see in last 8 to 9 months, glass first got hit by the demonetization. Then there was a Supreme Court ban and then the GST. And there was destocking across the counters on the liquor side. And liquor being almost 55-60% of our sales. Now, if you see in last 1 or 2 months, we are seeing that restocking coming back. That is also evident that some of the liquor companies are now showing good results as the market has started picking up, and all the destocking which happened in the market across the quarter is now again trying to restock. And we feel, I think, market should get normalized, and we should get growth here. From here onwards, we should be on a growth path on the packaging side also.
All right, Mr. Sikka, we appreciate you joining us today and taking us through what's happening with the company and how has the GST rates impacted HSIL, and also how the second half is stacked up for the company. Well, the stock definitely has been on a tear. It's come off day's high, but still trading with gains of as much as 5.5%. Let's revisit the markets, which are still trading very close to the 10,400 mark. A good time to get in Sacchitanand, Uttekar, AVP of Technicals at Tradebulls, who's joining us on the show now. Hi, Sacchitanand. Good afternoon. Thanks a lot for joining us. Well, briefly, we did touch the 10,400 mark. The options data somehow is suggesting a bullish trend. How are you viewing the moves on Nifty today?
Well, good afternoon. If you look at the entire week, the market has been trending up. But if you look at, on a closing basis, the closing has not been that decisive. In fact, this is the first session wherein, in throughout the week, wherein the market is closing above its opening level. So probably, yes, 10,300 is a remarkable level from here on. But if you look at the overall structure, the way we saw a decline from 10,000 450 mark down towards 10,100, and the way we have rebounded from that, we would like to qualify this particular move as a pullback move, and that's why we expect that 10,400 could be a hurdle in the coming week. So if you look at the entire data, as you rightly said, 10,300 is the maximum open interest which is built on the put side there, and it has been steady almost for 2 weeks now. So if you look at the formation itself, the way the force has been applied during this pullback is not that convincing. Even the sector rotation has been, not very consistent. So that's why I think, one should not get really excited with this up move, and probably, have some conservative approach for the coming expiry. And that's why we are recommending that, 10,400 put option, could be a good one, and probably, once the market again dips below, say, 10,350, we may see some unwinding in the 10,300 positions which are built up. So that's why we are recommending 10,400 put option. It can be bought in this particular range right up to 45. A stop loss can be kept somewhere close to 32, and we are expecting targets of around 110, 120 in the coming week.
This 10,400 put is for the November series, right?
Yes, absolutely.
Important to note, because you have just 4 days left after today's trade. So this put option has got the total life of only 4 days that you'll be betting on. So this is a put buying recommendation coming from Sacchitanand. And one stock, if you could talk about, Infosys, has played a key role in kind of enabling Nifty to reach at the levels where we see it today. 5% move in Infosys over last 2 or 3 sessions. How do you see that?
Well, the entire IT pack, it has shown some steam. In fact, the way Infosys is, moved up in last couple of trading sessions, yes, there looks, it is showing some kind of a hope. But, if you look at the overall structure, then 1,030, 1,025 has been a hurdle for a couple of months now. So it is trading near to that resistance zone, and it will be interesting to see how this particular zone is negotiated. In case if we see a consistent move on a closing basis in next couple of days above, say, 1,030, then probably we may see an extension of this particular move right up to 1,075 kind of a zone. So I think the critical level from here on is how it negotiates 1,030 mark. On the lower side, the way it has rebounded from the last 2 trading sessions, the immediate swing somewhere close to 960 would be a critical one from a broader perspective. So it is in that particular declining range, and the upper side of the range is around 1,030.
Okay, good time to get in Mukesh Singh, Head of Technical Analysis at Nila Financial Services, who's joining us on the show. Mukesh, tell us, what are your top trading strategies?
Good afternoon. The top trading strategies for the day are TCS is a buy around 2700 and the stop is to be placed below 2660 and target on the upside is seen around 2850. Regarding this particular sector, in Wednesday we have covered Infosys around 965 as a buy in morning show, and we had recommended a target area around 1020. After having achieved that particular value area, I think the baton is now will be passed to TCS for taking on the leadership in next 4 or 5 days. So that's the ideology behind this particular trade. Both the stocks are showing phenomenal impulsive characteristic as far as wave structure is concerned. And the other stock which we have covered is IndusInd Bank as a buy. Buying is to be done around 1682 and stop is to be placed below 1660. Target on the upside is seen around 1725.
Sacchitanand, what about you? What are you betting on?
Since our bias is slightly negative, ICICI Bank is one particular stock that could be a key ingredient in case Nifty, makes an attempt towards 10,300 for the Nifty. So what we are recommending here is a bear put ratio spread, wherein we are recommending that one should buy one lot of 320 put and sell 2 lots of 300 put simultaneously. The entire spread is available somewhere close to 4.5. In case if we see an acceleration below 310, this particular put can give a target close to 20. So this is a very good reward to risk scenario wherein we are recommending ICICI Bank more on the short side, but this particular move can be played with this particular strategy, bear put ratio spread. The second call is purely on the long side, considering the the kind of option positions that we have seen in V-Guard. So here we are expecting that there could be a sharp short covering move. If you look at the entire November series, 320, 230, 235 has been a hurdle for this particular stock, and today is the first day wherein we are seeing a decisive move above this particular zone. So we are expecting that there could be an acceleration towards 250, 254 kind of a zone, and a stop loss can be placed around 232, and this short covering move can be participated on the long side with a stop loss close to 232.
Okay, so those are some trading ideas. By the way, the stock that has really done well is J-Corp. Arguably this week's stock, or rather stock of this week, frankly, 13% up in today's session. This week returns would be northwards of 50% if I'm not wrong. Yep, 53 or 54 odd percent for this week. That is a really strong move for this one. Doubt the other ones have done like that, but J-Corp certainly doing really well. Questcorp is the one which has bounced back today, 8% higher after that knee-jerk reaction to the OFS. So digesting all of those losses as well. Good time to get in Anand Tandon. He's a well-known market expert, joins us right now on the show. Anand, good having you. Thanks for joining in. A bit of a sector rotation at play. While banks may not be participating, others are putting their hand up. Reliance putting their hand up to keep the index afloat.
Well, yes, today seems to be a fairly widespread kind of participation. And it's not necessarily only restricted to the frontline stocks. We have a lot of the mid-cap participating as well. I guess it's more a function of the fact that there is some amount of receding of fear in the market near term, though, what exactly has caused it other than the fact that the result has been somewhat in line with expectations is a little difficult to say. But the market seems to be fairly sanguine.
I think we were worried probably unduly about oil, and the jury is still out on that because we don't know what will really happen in the meeting next week. And suppose crude moves up $3 to $4 from the current level, could there be a steep correction like we had seen last week? Anand?
Well, I mean, I'm no expert on oil, and it is quite possible that there could be a correction. But on the other hand, it could also stay where it is or go up. You'll have to really ask the chartists and the people who track oil more closely. But the reality is that the commodity prices have gone up, and oil has gone up as well. And the Indian macro situation is now looking a little less, robust than it was a few months back. At the same time, there is some upside possible in terms of the earnings, though whether it will justify the level the market is at is a moot point, because at best, I think this year you'll still see single-digit earnings growth. Next year you may see mid-teens or lower teens earnings growth, and I doubt whether you'll get much more than that. So the market continues to remain expensive. But given the fact that we are coming again towards the end of the year, and the flows continue to be fairly robust, and the foreign flows have started somewhat again, I think, as I said, the market is choosing to ignore most of these issues and continues to remain on the upside.
Look at specific stocks today. Want to start off, Anand, with a quick chat with you on future retail. The street certainly seems to believe in some of the numbers that have been shared. The targets are stiff, both on the store count addition as well as the kind of revenues that can come in. But hey, what's a dream if it's not if it's not a giant one in nature? Future retail is on a roll ever since this strategy 3.0 has been announced. My question is, I know that stock is expensive. Is it pricing in all the near-term gains? Is it possible to even figure out the numbers and try and say whether the stock is pricing in some of the gains or not?
So let me put it like this. If you look at any of the retail stocks, they're extremely expensive, right? I mean, for any company to make money at 60, 70 times PE as a share is a bit of a stretch. Especially since we are also looking at a situation where the online business continues to grow, and there is no particular reason to assume that anything substantial has changed in terms of the way that consumers go out and buy. So right now, for whatever reason, the retail sector is in the public eye, and investors seem to think that there is a big story that is brewing up here. I think we've been disappointed earlier in the past as well. At that time, of course, the situation was a little more different, because what was happening was that the store rollout was happening, and there was a lot of competition, which meant that typically a store would take 5 to 6 years to break even or make money. Now, at least there is some experience in the market in terms of what kind of products can sell, where to put the stores geographically. So one hopes that this time around the capital is utilized a little more sensibly. But frankly, I find it difficult to understand why any of the retail companies should trade at the valuations they do. Within that, of course, the fact that you have a somewhat asset-light model actually helps companies like Future Retail.
You could argue about the other one, which is Avenue Supermart, that the free float is not, or is in a minority shareholder's favor. There's such few sellers. We probably not have a big selling day for Avenue Supermart, but Future Retail is on a roll. I think me and Pradeep were doing this comparison the other day. If you bought Future Retail when the Avenue Supermart's IPO came out, you made what, 3x or over 3x, right? 300%.
Yeah, so you made more money compared to had you bought after listing in secondary market.
In Avenue Supermart.
Oh, I'm curious to know then V-Mart Retail. I remember that counter was also going up just before the IPO came about. So that was also doing pretty well. So it was the entire retail space, I think, which was buzzing before.
Right here. Look at this.
That's the 12-month comparison we have. We just had that on the screen, Future Retail.
Yeah, that's me, but let's get the 12-month comparison.
Okay, that's Avenue Supermarts and the other is Future Retail. So clearly, Future Retail has given you more returns than Avenue Supermarts.
By a margin, 376% over 12 months is nothing to scoff at. Yeah. That's Herculean returns.
Also up almost 2 times. Yeah, this year, I'm saying. I don't know from the listing date of Avenue Supermarts, but I think it's been a great theme this year, and this is the sector which has wafer thin margins. I think they all operate at around, let's say, 7 to 8%. It's not even in double digits.
And which is why I think Anand's point is pertinent. I mean, if a sector is trading at 70, 80%, how can you make more money? I can understand these arguments that there's a decade-long 20% growth opportunity, but hey, 70 times or 80 times is just mind-boggling. The kind of returns that some of these stocks
the movement in this week, I think, is attributable to the 3.0
strategy.
Easy day new stores that they want to open. It's again an innovation.
I don't know if they meet the target they've given, but definitely the stock has given them those moves in just last 2 to 3 days.
Already.
Yep, it has. Okay, let's move on. Let's flag a few stocks actually which are doing well. Pull up a GMR Infra that's up almost 10%. Remember, that's your F&O counter. So that's seen some gains just in that last half an hour to 40 minutes. The other stock which is doing well today is Jubilant FoodWorks. That touched 1800 mark in today's session. It's trading at its fresh 52-week high, up almost 4.5%. And the all-time high levels on Jubilant is around 1959, which were last seen in July of 2015. So it's inching very closer to its all-time high mark. Sacchitanand, on the charts, Jubilant has had great year in terms of the stock price movement. What's the kind of levels that one can watch on the upside?
Well, if you look at today's move itself, I think even this particular candidate is a short covering candidate, and the way the level has been triggered of 1785. So probably if you look at the next hurdles, I think the next congestion for this particular stock is somewhere close to 1850. So probably we may say this particular move getting extended towards 1850 on an immediate basis.
Okay, so that could be a hurdle around 1850.
Can I ask Anand about Jubilant FoodWorks? Sorry, I don't know if you wanted to move on or not.
Speciality maybe, because that has also been buzzing.
Okay, fair. Anand, any thoughts here on this restaurant companies, Jubilant, Speciality? I'll throw in, which is that one? Westlife as well, if you want to.
Well, again, I think, somewhat some bit of upside can be expected because of the lower GST that has come through. But, will you really go out and buy one extra, go and eat a little more just because you're getting it perhaps 10% cheaper is a question. Overall volume should grow, but I think most of these companies are again factoring in same sales growth, which is far more than what is likely to be achieved. Finally, it's a consumer play. It will grow at a certain set space. No doubt, Jubilant has seen a turnaround in terms of the growth rates. I'd just like to point out that, if you look at the last IT boom, for example, Wipro at one time was trading at 100 times. And since then, I don't think it has actually reached the same price ever again in the next 17 years, though during the same period, the profits have probably gone up 10, 15 times. So, there is a limit to how much the market should be willing to pay. If those things are not carefully monitored, you may find that you have a great business which continues to grow, but you still may not make money on it.
Neeraj, have you had pizza from Jubilant of late?
No, I haven't.
No, I'm just wondering because I think even they were supposed to increase the prices after the rate was cut from 18 to 5%. And you know what? This is the sector. All the three companies. They all belong to the organized market, and because there is no input tax credit now they can avail, the net impact has not been great. I think the whole intention of the finance minister was that the product should be cheaper for the end consumer, but I think they're becoming only expensive.
It's the same price. If I remember that image that got floated around on WhatsApp, which was a McDonald's bill.
Yeah.
And then we had this guy come in, the McDonald's head honcho, Westlife developers, Amit Jatia, and say, but he did mention that certain of their key products, they had reduced the prices as well. So difficult to say really.
No, the logic here was because they all operate in the organized market. The key materials, the raw materials which they also source from the organized market. And that's how they were able to avail that tax input credit, which they've been doing it for the last 20 years, by the way. That's what he mentioned, which he cannot do it now.
So, I hope next time you order pizza, you'll also get a sticker on the pack really telling you what is the net impact of GST, because that is the new order that has come from the government. All the companies, the FMCG companies, when you get the fresh packaging, you'll see a label that will tell you how much is the impact.
Oh, that's interesting. We'll watch out for that. Okay. Some knowledge in addition to stocks as well. By the way, I repeat.
Of the day.
No, by the way, I repeat, if you have some questions, if you're watching this and if you have some questions for our experts, please feel free to post onto our social media pages as well, and we'll try and get them answered. For now, though, let's get in Nikki Mirchandani to talk about the buzzing stock of the day. Quest Corp could well take that mantle as well. And Nikki, not surprising, but the stock is on a roll after the OFS got over.
That's correct. The stock has risen as much as 13.9% today, and it's its biggest jump that we've seen ever since June 8, 2017. Volumes remain moderate at 3.85 times. Also, if you look now, the stock has cooled down a little bit from the higher level and is trading with gains of around 8.5%. Nevertheless, a good show by the company after the non-retail portion of the OFS got subscribed by as much as 5.7 times demand for shares. Now, remember, rupees 680 crore OFS got bid for nearly 43.6 million shares were bidded as compared to our offer of around 7.65. So that's a good 5.7% jump that we're looking there. Also, the bid was received at an indicative price of around 837.31 per share as compared to the floor price of roughly 800. Now, Thomas Cook, along with the founder Ajit Isaac, put 6% stake on the block, and following the share sale, the promoter holding will now come down from 81.5% to 75.38%. Just to give you a little background about what the company is, well, it's a IT staffing provider which has a market capitalization of around 12,000 odd crore. It was founded in 2007 and has been promoted by Fairfax, for that matter. In terms of the valuation, enjoys a superior valuation as compared to global peers, but then these valuations are expected to sustain given the kind of growth trajectory that we're looking for this company.
Okay, so that's Quest Corp. If you look at the movement over this entire week, thanks Nikki, by the way, for the update. For at least for 4 days, we have seen a double-digit move. One was on the negative side, though. And also, if you add to that SIS, you know, yesterday the stock was up around 15%. Today, again, if you look at it, the stock has gained in double-digit. Team Lease also had at least one good day this week on the back of buying by an institutional player. Today, it's down 3.5%. Anand, these three companies are not exactly similar, but yeah, more or less in the similar line. Any comments? Do you like any of these?
Well, other than the valuation, the business at least is somewhat attractive because, you know, there is some advantage to scale though thin. And, you know, there is clearly a move towards trying to outsource or not have people on your own roles for a variety of reasons. Of course, if the labor laws were to change dramatically and make it easier to hire and fire people, whether the business will still remain strong is a moot point, but I don't see that going away. So overall, I think you know, it's a business where scale matters, and all these companies have actually managed to get significant scale. As I said, valuation doesn't leave much room for the upside, but I think at least there is it's not a model which requires too much of capital, assuming that working capital can be funded by the clients.
Okay, let's pull up some IT stocks because I do want to ask Anand about the IT pack. Infosys should come up on your screen. That is, of course, leading the way. And I think much talk about how the stock was available cheap. Monday we'll do a extended analysis as well. But, you know, the last 6 months, the way the mid-cap IT space has outperformed compared to large-cap IT, this is just a bit of a mean reversion that we're seeing. Anand, the question though is whether the reason may be this whole expectation of a new CEO, and if indeed stocks would move up 5-6% without the growth prospects evident because of a new CEO or otherwise, or anything else for that matter, is large cap IT, which is growing at what, 6%, 8% at best, maybe an outlier is HCL Tech, which is probably growing at 10% or is going to grow at 10%. Is large cap IT a pocket to bet on? You may have valuations on your side, but you certainly don't have growth on your side.
Well, you know, actually, it's a question of expected growth. I mean, most FMCG companies are also growing in the same single digits or just about, and yet they continue to trade at 45, 50 times. You could argue that the margins are better and so on, but you know what? The frontline IT companies also have EBITDAs of higher than 20%, many of them at 25% plus, and their ROE is out through the roof. So they are doing equally well. But yes, there is a question of growth. I guess as you pointed out, the mid-cap has done quite well, and many of them have got certain areas which they have managed to identify and grow in. So their growth prospects are looking definitely better, and the stock price is reacting accordingly. Clearly, it's one of the few sectors which is indifferent to debt and so on, I mean, to interest rates, etc. So therefore, you know, it is one of the most clean sectors. What can drive the large cap IT is a bit of a problem, because until and unless the large economies were to revive, and there is some signs, of course, of that, you know, the BFSI sector is beginning to look a little more positive in the US, and perhaps that is what is causing people to relook at these companies, because after all, that finally drives most of the revenues for the large players. But I don't think that there is that much upside other than the fact that, you know, the rupee becomes far weaker. Then, of course, there will be some upside because of the currency tailwind. But other than that, I think the business will continue to waffle around. You still have, you know, single digit or mildly double digit kind of growth. And I don't see that changing very dramatically. If the new bill that the US is planning to bring in becomes operational, then your cost structures get even more skewed up. and to that extent, there will be further pressure. So on a sector rotation basis, I think some of these could move up. Also, buyback actions and corporate action also can drive stock prices, but there is a limit to how much it can go. I think the mid cap still continues to be more interesting.
Yeah, well, that doesn't surprise me as well. The growth rates are good. Hexaware is on record stating growth rate of 14-15% in the current calendar. They follow a calendar year. But the others too have, the commentary at least from Midcap IT has been a lot more robust. Anand, before we let you go though, I know we speak about this question a number of times and therefore it's difficult to ask you every single time what are the pockets that you are betting on. But if you were to look at the one pocket that everybody was betting on until day before yesterday and then started thinking that, oh, something could go haywire because of higher taxes, which was in trade yesterday, was the insurance pocket. I know valuations are stretched, but should maybe a misplaced belief or otherwise of potentially a higher tax rate, which you don't even know about, lead to a pause in what was otherwise a fantastic rally? I can understand if the concern on valuations brings a halt to the rally, but it was a misplaced belief. It may not be misplaced, but for now, it is a belief that the tax rates may go up, which led to this bit of a pause.
Well, no sector can continue going up one way. I think the sector is already strongly overpriced. The good thing about insurance is that it is new in the market and therefore not there in most portfolios, and therefore that will provide some support. But also the fact that ostensibly it would appear that there is a large headroom in terms of growth. Though if you look at for example, life insurance, the number of policies on offer is not that is already in the market is not a small number. Maybe the value may be small, but not the numbers, and it's probably a reasonably penetrated market. So if you have to look at the financials in terms of saving products, I think the asset managers are a lot more interesting. Not that they are cheap, but at least there is a lot more headroom possible. Coming back to the insurance business, I think for some time it needs to pause and rest for a while for the valuations to become a little more palatable. You have to remember that this was a sector not doing too well 2-3 years ago, up to 2-3 years ago, and then there was a set of regulatory changes which actually allowed increase in commissions, and that is what started to push it up again. And again, we are seeing that the ULIPs are again the ones that are driving the growth, both of which is not good overall for the general health of the sector. So to come back to your question on tax, if tax will come in, obviously that will reset some of the estimates. But even without that, I think the valuation doesn't leave much on the upside. And as I said, if you're looking at financials on the savings product side, I think the asset management companies or those related to wealth management are perhaps a better bet.
Okay, and then we'll let you go at that note. Thanks a lot for joining us today and giving us your thoughts on markets. Let's just address few stocks. One pocket or rather theme which is playing out, not only today but in the past few sessions, has been the jewelry space. Pull up Gitanjali Gems. That stock's rocket in today's session once again. It has seen gains in the last 2 days as well, and the gains have just come in the second half of the session. Not only that, you've got TPZ, that's also trading with gains of 3.5%. Thangamel Jewelry, Titan, Tara Jewels, that's seen significant gains of almost 13% so far. And remember, most of these gains have just come in the last half an hour or so. I don't know if there is any development or so, but PC Jewelers, that's the counter which is in the F&O space. So we can get some view coming in from Mukesh. Mukesh, on the charts, PC Jewelers currently at 381. If somebody so far has not looked at this counter, can they take a fresh long here?
I would advise to buy, if someone has waited till now, then wait for another $4-5. Let it clear this 387 area before buying fresh. But as far as trends are concerned, then this particular stock seems to be on a very firm wicket, and it's just a matter of time when the breakout happens. Once the breakout happens, then one can trail the long positions with the stop placed below 365.
Okay. One stock which has just moved up, I think, unless I'm very wrong, is IGL. I think it's just started inching up a bit in the last few minutes of trade. Just bring up IGL for you. Yes, a sharp spike up for IGL, 3.5% high. It's a good move for that one. I think MGL too is moving along with it. Well, the business case is set ever since the pet coke ban was in place. But good moves really, and continuous moves for both of these names. So good going out here. And by the way, surprise, surprise, Aurobindo, unless I'm very wrong again, it was doing well, yes, but I think it's moved up in the last 30-45 minutes of trade, yes, inching higher and now closing in at the highest point of the day. Sacchitanand, can I ask you about Aurobindo? Have you looked at it in the last few minutes of trade, or maybe even in Indiabulls Housing Finance?
In fact, the previous stock that you talked about, MGL, we have a BTST trade out here. In fact, 1077 is what the stop loss that we have recommended, and we are expecting that this particular move, which has just commenced a couple of minutes back, could extend towards 1125. So this is a good candidate from a BTST perspective. If you look at Aurobindo Pharma, yes, 700 has been a decent support for this particular stock, and it has, really respected this particular support again. So the way it has bounced back, I think the challenging level for this stock would be somewhere close to 720. In case if we see 720, getting breached probably in the early part of next week, then probably we may see a good bounce back in this particular counter right up to say 745, 750. So, from a level perspective, 720 would be a critical one. But from a BTST perspective, I think MGL is providing a phenomenal reward to risk for a fresh long.
Mid-cap real estate is the other one, guys, which is moving well. So, Marathon is up 3.5% if I'm not wrong, and that takes the stock at new highs. Kolte Patil anyways has been doing well, but Puravankara is the other one. Look at that one, it's on a roll, up about 9 or 10 odd percent. So really good move for Puravankara in the session today, 152 and counting. These are the set of 3 or 4 names which have consistently been doing well for the last 1 month. Nipun Mehta of Blue Ocean Advisors and Blue Ocean Capital joins us right now on the show. Nipun, good having you. Thanks much for taking the time out. We've spoken a number of times wherein you look at themes or events happening around you and then tend to realize that, hey, maybe investing in these areas could actually, make money as well. I mean, what's happening within real estate? Because the push that is coming in is strictly for affordable housing, right? And it's not that all of these players are into affordable housing. They are. Marathon, for example, I don't think does affordable housing. Puravankara is probably large out there. Kolte Patil is not. I mean, the biggest pie of its business would not be affordable housing, and yet these are the ones that are doing much better than the ones which are traditionally big into affordable housing, the likes of Mahindra Life Spaces or others. What's happening within real estate?
Good afternoon, Neeraj. I think on the one side, I think you're absolutely right on that observation that yes, on the one side, the theme of affordable housing seems to be catching on. On the other hand, a lot of these names which are not into affordable housing under the pretext of affordable housing are really going up. But our sense is really when you look at the fact that in certain cities like Bombay, cities like Gurgaon, there was almost 4 years or 5 years of inventory that was lying around unsold. And the fact that fresh construction has virtually come to a standstill in areas where there was this kind of huge inventory was around. The South probably had lesser inventory, so to a degree, some of these names are focusing on the southern market, and which is where you're probably seeing some offtake happening. The unsold inventory level or the overall stock on hand was much lower there. It of course still had anywhere from 2 years to 4 years or 2 to 3 years of inventory, but to a degree, sales seem to have caught on in the southern markets. Even in the other markets, at least to an extent, inquiries appear to have started. Sales are really clearly still not happening. Also, given the push that a lot of these NBFCs are having and aggressively pushing for housing loans to be taken by people, and that to a degree ensuring that costs are low, the interest costs are low, is to a degree helping. So our sense is the market seems to be discounting maybe 6 months or a year down the line the kind of sales that some of these developers could be showing. If you look at it at the current juncture, really, it's not that sales are happening and it's likely to show up in profitability over the next quarter or 2 quarters. We doubt whether the December or the March quarter will really start showing up this kind of sales the way some of these stocks have been moving up really.
If you had to play this this story, would you really buy into one of these listed real estate companies, or you would rather buy an HSIL, a Century Ply, maybe even a Sheela Foam?
So, when you look at it from a pure fundamental point of view, we would go by the building materials theme. So yes, clearly, a lot of these building materials, whether it is tiles, sanitary ware, plywood, and a lot of these allied, is something which seem to be very clearly more fundamentally sound. But if one were to look at it from let's say a 1 year or 2 year perspective, the upside that could be there in real estate could be higher than what you're seeing in the building material space, because a lot of the building material space, while fundamentally far stronger, showing a lot more consistent sales, lot more consistent profitability, decent margins, it has to a degree run up or appreciated over the last year or 2 years in a gradual manner. But the real estate market has moved up only selectively and in very select pockets. So if one were to look at a higher risk, higher return theme, I would still look at real estate. If one were to look at a safer theme, one would look at building materials as a space.
Okay, guys, some pat on our back. Amongst other things that we did really well this week in terms of stories, and you can go on to bloombergquint.com and watch these stories as well. One was this whole Ambani versus Ambani story and how the wealth piece shaped up. There were some other very interesting pieces were those smart on the board portfolio and this whole analysis that Darshan did on Vakrangi software. Now, I don't know how closely Nipun Mehta has looked at that one, but since we were talking about IT ahead of the last half an hour with Anand Tandon, I just want to ask Nipun about some of these specialized tech and tech-enabled company, Nipun, because while we talk about IT, you don't club an 8K Miles or a Vakrangi software into that pack. These are slightly different tech-enabled companies. Do you look at any of these? And I don't know if you got a chance to see our coverage on Vakrangi or for that matter, any of these other specialized names, but any thoughts on these specialized IT names?
Sure, Neeraj. And I did see a lot of these special themes that you covered. I think they were very interestingly done. I think as companies, a lot of these have evolved into business models which probably to a degree didn't exist earlier on the one side. On the other side, they've replicated the aggregator model into, let's say, a retail business or into similar software-based businesses, which has ensured that the reach that they have, just as an example, if we can look at the company you mentioned, Vakrangi, the reach that they have currently is something that ensures that they would probably be delivering or catering to virtually every single pin code within the country. So if there are close to about 19,500 pin codes or thereabouts, it would be catering to every single pin code. And when one looks at it from the point of view of either e-governance or banking, or from the point of view of how the business that they do with somebody like Amazon, the reach that kind of reach for a company like Amazon is something which they would not probably have in any country globally. So it's a very exciting scenario when you look at it from a Amazon kind of company point of view of the kind of reach that they have. And that becomes, for a company like Vakrangi, more of an aggregator model where you're tying up with banks, you're tying up with these kind of software companies, you're tying up with logistics companies, you're tying up with the mobile companies in terms of prepaid airtime, you're tying up with autos, you're tying up with insurance companies. So it's becoming virtually a financial powerhouse to a degree. They've not started giving out loans, but they could probably even look at tying up with, let's say, a Bajaj Finance or some such for loans as well. So it's to a degree an aggregator model, a differentiated software model, which is ensuring that the virtual strength of distribution pan-India is reflecting in the kind of market capitalization that they have. And I think that's a very differentiated model, and which is where the markets seem to have realized that the valuation that should be there. So why on the one side should a brick and mortar model like DMart have an X valuation, and maybe another model like, again, like as an example of Akrangi, which has probably 40,000 outlets, but obviously with a much lower revenue per store. Why should it be a differentiated kind of valuation model that should be there? So a lot of those interesting discussions and valuation models is something that would gradually start throwing up when you cover such interesting stories like, let's say, an 8K miles or a Vakrangi and the like.
Okay, Nipun, thanks so much for that as well. But stay on, so much more to talk about. But just before we get in, what dealing rooms are recommending in the session today, because that time of the show, we haven't quite asked Navneet about the stocks that could enter the ban, F&O ban, or come out of the ban. So Navneet, first a quick check there.
Well, a lot of stocks. GMR Infra, which is buzzing in today's session, it's up almost 9 to 10%. If you look at the total open interest as a percentage of market-wide position limit as of yesterday was just at the borderline of 95%, and we have seen a bit of open interest addition on GMR Infra's future. The other stock, Granules India, the overall OI has been hovering around that level of 92 to 94, but in today's session there has been some addition. Just a word of caution, this data can change in the last 10 to 15 minutes of trade as well. And mid-cap PSU Bank, these stocks usually don't feature in this list. Look at Oriental Bank, Syndicate Bank, both of them have touched the fresh 52-week high in today's session, and there's a lot of open interest build up both on the futures as well as a couple of option strikes. So these four stocks may enter the F&O ban for Monday's session. What can come out are three stocks: Jayaprakash Associates, DLF, as well as Reliance Communication. If you look at the overall open interest, it has to breach the 80% mark to come out of the F&O ban, and three of them have seen a bit of shedding in both the futures as well as option strikes in today's trade.
Thanks a lot for that, Navneet. Okay, now time to get on to what dealing rooms are recommending in the session today as well. Just keep in mind, and we'll talk to Yatin about this, because apparently wind power supply agreements of about 1,000 megawatts capacity have been signed today. Don't quite have the pricing as of now, but they've renewed a bunch of capacities of Inox, Adani, and a couple of other players as well. Yatin, just before we actually get to what dealing rooms are recommending in the session today, any thoughts here on this?
As you said, Nila, the pricing data is not available, and probably if it's at 3.5 rupee per unit, probably it will be more profitable for companies, including the listed ones, which is Adani. So we'll watch out for that one, because the trend is quite negative for wind and solar in terms of bidding. We got to as low as 2.5 rupee. And probably if there is some kind of recovery or better pricing discovery on the higher side, we could see some positive reaction. But without the quote, probably.
So what's the pricing that needs to be out here, Yatin?
So typically for wind and solar, so far, Neeraj, it has been in the range of 2.5 rupees, which was earlier as high as 9 rupees. So probably if you have a pricing in excess of 3.5 rupees per unit in terms of the supply agreement, then it will make sense for us to discuss and analyze, and probably the stocks in the solar space could be on the positive side. And more importantly, we have the Government of India, which will be next week hearing on an anti-dumping duty case on solar equipment. So that is also something we will be watching out for closely. So not only solar power producers, but the solar power equipment manufacturers also could be in focus next week.
Okay, so just before we start what dealing rooms are recommending in the session today, remember the stocks have spiked. I think Adani Power has moved up a bit. I don't know if Inox Wind has started, but Inox Wind I think anyways was doing rather well in the session today. But keep in mind, we don't know the pricing. The pricing has not been mentioned, so unless the pricing is good, above 3, as Yatin said, 3.5, it might be difficult to build up a really big trading case also for these stocks. So just keep that at the back of your mind. 10 minutes or 12 minutes left. If indeed the pricing flashes come up, then there could be something material, but otherwise difficult to take a call. However, what are dealing rooms recommending in the session today? Let's start off with Darshan and Yatin with that, and Darshan, you go first.
Yeah, okay, so Delta Corp is one of the stocks that dealers are talking about. It's rather flat in today's trade, but a couple of large mutual funds over the period of time have been actively accumulating the counter. So Delta Corp is the first counter that we are talking about. Great Eastern Shipping, GE Shipping, is something that dealers have spoken about. There is a buzz of a potential corporate announcement that could come into the counter. So GE Shipping is something that we are watching out for. And finally, Network 18 is something that dealers are talking about, up almost 4%. Some of the HNIs are actively accumulating the counter. But Yatin, what are you hearing?
Darshan, in the morning we were watching out for RBL Bank, and That is one company wherein we saw some bulk deals coming in the morning, and post that the stock was quite active, went as high as 525, 527 levels and cooled off from that level. But dealers still indicate that domestic funds are buyers here, and probably next week we could see some fresh buying as far as RBL Bank is concerned, and hence they're recommending a buy here. Also watch out for Butterfly Gandhimathi. That is one stock quite active, and in the recent past has moved from levels of 200 to almost 425, and despite that move, dealers are anticipating that there could be further up move as PMS funds are said to be buyers at even these levels. And finally, watch out for Camlin Fine. That stock is locked in 20% upper circuit, and dealers from these levels also are expecting a 10 to 15% upside, as they have the specialty chemical business for the company which could pick up in the coming quarters, and on that anticipation, a lot of HNI buying and dealers expecting a short-term up move here on.
Thanks, Yatin, as well as Darshan, for bringing that dealing room check. Well, the other stock which has been locked in upper circuit besides Camlin, which Yatin just highlighted, Zuari Global, that's up 2%. Remember, the September quarter earnings for this counter was pretty good, and Jacob is up almost 17% now. The other stock, Balaji Telefilms, that stock seen good gains today. In fact, now in the second half, you did see some incremental buying coming about, and currently the stock's also seen, it's trading almost at day's high. And your top F&O gainer right now is TV18 Broadcast, which is trading almost around levels of 50 or 50 and a half. You've seen some open interest build-up also coming about on the long side, and look at that, it's almost trading at day's high. Sacchitanand, I just want to get your view on these stocks which I just highlighted, TV18, or you also had Zuari Global, which is locked in upper circuit. Do any of them look good on the charts? And also Balaji Telefilms, I'll add that as well.
I'm really sorry, I really don't track any of them. But TV18, yes, with the volume activity in place and the way 48-49 zone has been negotiated, probably in case if the stock settles above say 49.50 or so, then there could be an extension towards say 53-54 levels. So from a volume and price perspective, I think TV18, the breakout, in case if it sustains here on a closing basis, then probably we may see an extension.
In fact, you add Network 18 and Dish TV to it as well. Entire media sector is doing well. Nipun, do you like this sector? Any of these stocks?
Well, I think very clearly on the one side, what's happening is ad revenues for all of these entertainment or stroke media and entertainment companies is gradually inching up. You did see sort of a lull sometime back, a few quarters back, but the kind of spend that's coming in from white goods companies, telephone company or telecom companies, from FMCG companies, all of that is something that's clearly showing up in their revenues. It used to be a little more intermittent earlier. Now it's given that rising ad spend and the fact that if the economy does pick up, given the benefits of GST, these kind of ad spends will only rise over the next few quarters. I think that's what's clearly reflecting in some of these media and entertainment companies, wherever there are dominant ad revenues that are there. Yes, as a space, while some of the stocks have run up over the last few months, yes, I think as a space, when you look at the ad revenue potential, we continue to be overweight on, I think not overweight, equal weight for some of these media and entertainment companies.
Okay, let's get in closing strategies from our experts. Mukesh, to you first, your top closing strategy.
I think I will go with this Tata Power. The stock has formed a classical rounding bottom, and it seems to be closing around the high of that particular demand area which the pattern requires. And I think around 93, 94 one can buy. Stop should be placed below 89 for the traders. And on the higher side, I am expecting a move towards 105 to 110 area in coming weeks.
Sacchitanand, your top closing strategy?
The one which we have discussed is MGL. We have recommended this as a BTSC candidate for a target for around 1125. The stop loss can be placed around 1077. And on the short side, there's some pressure which is being witnessed in some of the cement stocks. So ACC is one particular stock wherein we expect that the pressure could continue, and we may see ACC heading towards say 1670, 1665 kind of a zone. A stop loss can be placed at around 1705, and short positions can be initiated at this level itself.
Let's look at some more stocks. Navneet Education is doing well today as well. Yesterday also we marked towards the end of the day. The stock moved up with good volume. Two auto ancillary plays, Jamuna Auto and Rane Brake. Rane Brake in particular is up around 12 to 13%. Jamuna Auto is here up 3%. And one more segment, which is shipping. You look at Mercator or you look at Shipping Corporation, both these stocks have done well in today's trade. Mukesh, any picks in shipping sector?
I have been following this Mercator for a while, but every now and then it just flatters to deceive. I mean, let's hope that this particular time the move which is building on seems to be a bit of a longer term move, and I am expecting good move over here in Mercator lines, expecting a move towards 50-55. Stop is to be placed below 37-36 kind of area.
Okay, just before we start wrapping up, keep in mind stocks which are trading at new highs include a Ganesha Ecosphere, 414 rupees. This is this company that takes into account, takes e-waste and then kind of processes it. So that's doing really well. And Future Retail is nudging 650. We spoke to Kishore Biani yesterday. The stock was at 595. Such a radical move in today's session as well. Another 10%. That is some going for Future Retail as well. However, I think we're very close to the market close timing, so let's start wrapping up the market as well. First, hand it over to Pradeep to take us to the index and the large caps.
So going great overall. If you look at the Nifty, 10,390, close to 10,400. Last Friday we touched 10,350 and then it took us 5 days really to cross this decisively. What is also good, if you look at Nifty is up only 40 points, Nifty Bank is up only 35 points, but unlike last few sessions and even the Friday that we just mentioned, there is no pressure during the day. Market has not corrected from day's high, rather closing, going to end the day very close to the higher level. So that's a big positive. Story remains the same with mid cap and small cap. Nifty mid cap, by the way, is inching towards 20,000 mark now. Let's look at some of the heavyweights that really played a key role in today's move. Infosys up 5% in last 2 to 3 sessions. You have M&M doing well, Kotak Mahindra, Bajaj Auto. So across sectors, some support coming in. Well, interestingly, while Infi was leading, Wipro is more or less flat, so not much gains for that one. HUL was yet another sideways day today. But on the flip side, we had two key banking stocks, ICICI Bank and SBI, both down close to 0.5% to 1%, and Hero Moto and Tata Motor were among the key losers from auto sector really.
Well, Pradeep, there were a lot of buzzing stocks, so to say, in the broader markets today. The first up on my list is Balaji Telefilms, which surged in the second half of the session. If you can see it on your screen, actually it closed almost at its day's high, so that's a very positive sign, closing with gains of as much as 13%. The other stock which rose just in the second half of the session was Jubilant FoodWorks, touching its fresh 52-week high today. Jubilant FoodWorks saw gains of almost 4.5% coming about. From the F&O side, one of the top F&O gainers security-wise was GMR Infra. That stock saw a good amount of long build-up, and as you can see, the gains just came in that last half an hour to 45 minutes, and the stock also closed very close to its day's high, I guess, with gains of 10%. You had stocks like SBI and ICICI Bank, which were weak today, but today was the day for the mid-cap PSU banking space, and one of them was Syndicate Bank, which was doing well right from the word go in the morning session. So that stock closed with with gains of almost 4 to 5%. Jewelry stocks have been buzzing in the last 3 sessions. So you had stocks like PC Jewelers and also Tara Jewelers, which saw strong gains in today's trade. Locked in upper circuit were Zuari Global with gains of almost 20%, and you also had Camlin Fine. That stock also had a great day, locked in upper circuit with gains of 20%. Just one stock I want to highlight on the losing side, Newland Laboratories. The company came out with its numbers this week. The stock was down 10% yesterday, and today you had further selling coming about. The stock saw cuts of about closer to 8-9%, Neeraj.
Yeah, but the one good thing in markets close today, as Navneet was saying at the start of the show, is that we haven't buckled down. We stayed up about 0.5%, and we haven't really closed in a disappointing fashion, which is actually a rather good sign. So good going for Infosys, which leads to this uptick that we saw. HDFC Bank about 6.5%, so that's not done too badly for itself. ITC contributing about 5 odd points to the rally as well, so good going there. Yeah, some negation by ICICI Bank, maybe State Bank of India and a couple of others, but by and large we've had good moves today from the heavyweights. All the 4 stocks that have moved up today are heavyweights in their own right, and that is probably what matters in a big way. Just bring up what the market breadth was and what the volumes were, because when we started off the show, the volumes weren't the best. But while we've contracted on the market breadth front, I think it's still okay. About 3:2 in favor of the advances, which is actually not a bad sign. And just get in what the volumes were in today's session as well. Trade tepid at about 2. Right now, 2, it's okay. I would believe par for the course. Nothing too dramatically higher on either the cash on the F&O segments. BSE cash probably a bit higher than what I've seen in the recent past. Lastly, just get the GD function on the terminal, Bloomberg terminal, if we can, and just show you. Okay, this is okay. Let's first do the GD, and this is what's happened in today's session. So the top volume buzzers on the large cap space: Infosys in the cash market, Ultratech, Bajaj Auto, TCS participating as well. So IT is seeing some high cash market volumes as well. And in terms of what's really done well and otherwise, I think GAIL and Bharti Infratel most up, and Vedanta and SBI slightly lower in trade. Lastly, just pull up the index picture or index performance for the week gone by, and you'll see those names. And let's just get in the camera a bit closer for the benefit of our viewers. So Sun Pharma, 6% gains, GAIL 6% gains, Reliance right here about 4.5%. So the big boys certainly participated. Infosys has done well, and UPL, a management that will join us on Monday, has done rather well for itself. And what has not done well is the cement pack, as you can see. So Ambuja at the bottom of the heap, somewhere around Ultratech should be there. Yes, Ultratech about 0.5%, not losing out too much. And IT has had a mixed week, with Infosys doing well and TCS not so. So it's been a mixed week of sorts. Let's wait and watch if the expiry week throws in some more surprises. It's a busy week. Next one, keep in mind, with the OPEC meet, as Pradeep highlights almost every single day, also slated to happen. So that's something you should watch out for. Anyways, final thoughts from our experts. Mukesh, what levels would you watch out for on the expiry? Okay, Sacchitanand, if I have you, what levels would you watch out for on the expiry?
Well, as I said, we are, expecting that the markets could, again retest the 10,300 mark and probably, see a slide below that. But before that, the critical level from here on would be, how it negotiates, say 10,340 kind of a zone. And on the higher side, I think 10,420 looks like a resistance for the coming week. So probably, it will be very difficult to, gauge one particular level. But yes, in case if the market starts, descending towards 10,340, then probably there's a good strong chance that we may see an expiry below 10,300 and probably somewhere close to say 10,170, 10,150 kind of a zone.
Okay, Sacchitanand, appreciate you taking the time out and joining us. Thanks for being with us today. Nipun, before we let you go, we've asked you a bunch of queries and stocks that we wanted you to talk about. Anything that sounded interesting to you in the last 7 or 8 odd days? A theme, a stock that looked interesting?
Well, Neeraj, I remember talking a couple of weeks back on the IT theme and the fact that it was underowned, the fact that the balance sheets were fairly strong, the fact that the valuations are gradually becoming attractive. I think it's gradually and very slowly showing up in some of these IT companies in terms of investor interest. I think gradually the same thing goes probably for the pharma space as well, given the fact that there has been a huge amount of apprehension virtually across all companies now, at least the larger ones. That's gradually, probably slowly and steadily, it's not going to have a V kind of recovery, but at least a gradual recovery that we're seeing. I think these are themes which, particularly themes of under ownership in a state, in a situation where you're finding valuations otherwise for a lot of the sectors to be somewhat stretched, somewhat rich. We would believe that there would be some movement towards under-owned spaces, under-owned sectors and themes, which are not just showing consistent profitability, but also where balance sheets are fairly strong.
All right, gentlemen, we'll leave it at that note. Thanks a lot for joining us today and giving us your views on the markets, and have a great weekend. Well, with that, we'll wrap it up here on this edition of Countdown, but don't go anywhere. On the other side, we have a special conversation going with Cyril Shroff of Cyril Amarchand Mangaldas. So stay tuned to Bloomberg Quint Live.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people. We're joined this afternoon by Cyril Shroff, Managing Partner at Cyril Amarchand Mangaldas. Mr. Shroff, good afternoon. This is Bloomberg Quint you're speaking with. I'm Menaka, and Ira and Harsha in studio as well. I'll start off with the first question. There is considerable amount of debate on whether the government has done the right thing by promoters. More importantly, whether they've done the right thing when it comes to price discovery of an asset by leaving promoters out. My counter to that would be that promoters still have a window of opportunity. If they're able to pay the overdues, they can still participate, be eligible and participate in the bidding process, submit a resolution plan. Do you think that is enough?
So let me comment on three things, Menka. One is on the sort of political consciousness of this and the political message surrounding this. The second on the commercial aspects, which includes some of the points that you just made. And the third, I think, is unintended consequences. So as far as just the political positioning of this, it sounds right, because I think there is an atmosphere in the country just now about defaulting promoters being sort of bad guys. And because they are so-called bad guys, they should not be allowed to take any benefit from this process, because they could effectively land up getting the assets cheap or at least with the banks incurring some losses, and the end state with the promoters being sort of back in the saddle. So just from a very loose emotional public opinion perspective, it kind of sounds right, even though this is somewhat unusual in comparison with other insolvency regimes across the world. So it's a bit of a Indian extension over here, taken in the light of the fact that Indian businesses are, many of them are sort of promoter controlled. So I think the political messaging of it seems to be over here, and I think there are two narratives on this. The other narrative is why should they not, so long as they are participating pari passu with anybody else who could. Let me then come to the commercial aspects. From a commercial aspect, the fact that you're taking out one of the serious potential contenders, naturally the more you limit the number of participants, price discovery could be lower, and that you have to sort of trade off with the moral hazard of the promoters being allowed to come in. But here on the commercial aspect, I want to now take a slight detour on the unintended consequence. And this is still a very early reading of the ordinance. There's a lot of reflection and fine print reading that has yet to be done. In my first look at this ordinance, in the enthusiasm to expand and be comprehensive about the list of people who could be disqualified from participating, I think it has gone so far that you might actually be lining up hitting a lot of genuine, what were thought to be independent bidders, because they might have some connection somewhere or the other with people who may be tainted in this perspective as well. I don't think that has been properly thought through, and I think it's going to pose some practical challenges as we go. So I'm not going to take any names, but there is a fine balance between being comprehensive and having a footprint of disqualification that could include people you never intended to cover as well. And I think there's a serious problem over here. So that is problem number 2. Now on, so as you go down the list of disqualifications as well, I think there could be some part of the sort of unintended consequences theme. I think there are areas which should have been clarified as well. Now coming specifically to the point of the window of opportunity, the window of opportunity is somewhat to be found in this new clause 29AC. Which talks about the ability to, it's sort of an exception to the disqualification, where there's a reference to failure to make payment of all overdue amounts with interest thereon, and charges relating to the non-performing asset. So what is unclear is the fact as to whether this cure, if I can call it that, applies to the asset that is the subject matter of the insolvency and the NCLT case, or is it some other asset? So who are you disqualifying over here? Are you disqualifying a resolution applicant who has a problem somewhere else in his group, or are you disqualifying the party who is actually got, or disqualifying the entity which is the subject matter of question? So this requires some clarification as well, but I don't see a logic in if somebody were to show up with a check at the door, whether it's the company itself or the promoter, and saying, okay, here is the money, why should that be, why should they be disqualified? Because it serves the purpose of the price discovery, it serves the purpose of getting the lenders their dues, and you have solved the problem with the threat of this process. So I'll stop here for a second and take any further questions.
Perfect, thanks. I have one further question. I'll pass it on to my colleagues thereafter. I think you've, in describing the inability to interpret finely the fine print of that particular provision, you've also answered the question that someone asked me on Twitter last night, and that question was in 2 parts. One is, if you had a default in one asset, does that disqualify you from being able to cure any other asset, as you pointed out the word cure? And secondly is, does this still leave the scope open for Ms. Promoter A of asset B, which is an insolvency, to bid for asset C And so basically 2 promoters of 2 different projects bidding for each other's projects. Because they'd be disqualified as bidders for their own projects, but not necessarily disqualified as bidders for somebody else's project. Now, I don't know in what condition, you know, would Bhushan Steel want to buy Monet Ispat and Monet Ispat buy Bhushan Steel? I'm referring to the promoters. I don't know if that's true, but I'll ask you the question nonetheless.
So I think there is a drafting problem here, which needs to be clarified, and what the intention needs to be clear as to, you know, who are you trying to disqualify? Are you trying to disqualify anybody who in his Janam Patri has a sort of an NPA, or are you disqualifying the promoter in that particular case? So these questions will arise, and I think the effort just now, as all practitioners in this area, is to get as much clarity as possible. So now we appear on for different roles in this. We sometimes act for creditors, sometimes we act for resolution professionals, and sometimes we act for buyers. I think ambiguity is the enemy of sort of clarity over here. And what we need now in the bankruptcy regime today is extreme clarity, because any ambiguity could lead to a challenge in court.
Mr. Shroff,
and of course, until that ambiguity comes from the legislation or the regulators, we'll have to interpret it as we go along.
Okay, just one question, Mr. Shroff. For an honest promoter today who is not allowed to participate in the bidding process, what are the options that he has? What are the legal options that he has? And do you see a protracted legal battle, promoter challenging the ordinance, promoter challenging banks? And does the timeline of this process, is that at risk?
See, I think there are going to be a lot of grumpy faces with this ordinance. So someone is going to have a go at it for sure. And I mean, I was reading this morning's newspaper, and already people are talking about some of the challenges to this as well. So to answer your question, is somebody likely to challenge it? I think the answer is yes. Particularly because of the manner, it would be perceived as a bit high-handed, because at one blow you've kind of barred, as you say, an honest, even potentially an honest bidder honest promoter from coming back. And unfortunately or fortunately, whatever may be the intention, this does not make a distinction between an honest defaulter and a not so honest defaulter. There's a wide list of categories which includes the whole kitchen sink.
Mr. Shroff, you know, a question from the creditor standpoint, just because you would have dealt, you know, with them and probably understand their thinking far better than we do. From their perspective, from everything we've gathered from them, they see this as, you know, positive in terms of, you know, the credit culture, the establishment of the creditor-debtor relationship, etc. All of those I understand are intangibles, but they also realize that in a tangible sort of scenario, they may see lower recoveries from some of these assets. Which of those two, you know, sort of arguments would you buy more in the current scenario, knowing also very well the quality of the assets that are out there right now for insolvency?
No, I think that it's very clear, it's clear from the preamble to the ordinance as well, is that the imperative of this was political and the moral hazard issue, and not a commercial consideration. So it sort of gets a tick on the public opinion, moral hazard, political messaging, but it does complicate it. Now, I am all in favor of a clear, efficient bankruptcy regime. So I am a great believer in the new code, but given how complex this area is, and with so many stakeholders being involved, I think it will always have to be tempered by not only clarity, but a fine, nuanced balancing of interests. And potentially, I think there are parts of this which go overboard.
All right, that's a fair assessment, sir, because we've heard many different voices. In fact, earlier this morning, we had Anand Singh in a very fiery conversation with us tell us how, in fact, this opens the door for other bidders, that is the non-promoter bidders, to game the system. Because by taking away the promoter from the bidding system, A, you're hurting price discovery, and B, you're making it much easier for them to be able to gain assets. I just have one counter to all of this. I understand that we should not mix commercial wisdom and commercial sense and commercial legislation, more importantly, with emotions of any sort, or vindictiveness, or the attempt to say, hey, you know, promoter, you've gamed the system, now we're getting back at you. But would you agree that if promoters and all these assets have been through several months of efforts by JLFs or lenders to restructure, if they have not succeeded in being able to restructure then, if they are not able to take opportunity of that window of hope that's currently in this ordinance, if we've read the text right, and therefore pay back the overdues at this point in time and be eligible to participate in the process. If both opportunities have been missed, then would you still consider the promoter an actual potential bidder? Because that means he just doesn't have the ability to raise the funds to make a bid, either to restructure the asset before it goes to insolvency or to be able to make himself eligible to be a bidder, in which case his bid most likely will not be one that is very healthy. So are we really losing much?
No, I think, Menka, I think that will depend upon whether it is a bid with a promise to pay in future or it is a bid with cash on the table. If the cash on the table is there, then why does it matter whether in the past he was able to produce it or not? So, and I think the test that Clause C lays down is that has failed to make the payment of all overdue amounts. So it actually envisages actual payment. If the payment is on the table, then problem solved, no?
You weren't able to pay in the past,
regardless
fine.
of the history.
No, so you weren't able to pay in the past, fine. We won't be vindictive. We're giving you one opportunity right now, maybe a short time window.
Because I think the pressure, I think it's a question of human psychology. Yeah, I think it's human psychology, because now at this stage the desperation levels will be higher, because it is now within their visibility to see that this asset may be lost to them forever.
Yes.
So with the level of desperation at the inflection point, I think the motivations to find the money will be greater. Isn't that obvious?
In fact, can't we argue that this is in fact a masterstroke? It's not ruling you out. It's threatening to rule you out if you don't pay up today. If we are not pushing people now to find money, how many more years are we going to give them, and how much longer should the rope get? So at some level, it's a masterstroke saying we're not closing the door on you. If you pay up today, great, you're in the room. If you don't pay up today, and if you can't pay up before your asset goes into resolution,
it's like you know, before the you know, the plane is taking off, and you know, this is the last chance before we shut the door.
Yeah.
But you can still sort of make a dash and with your checkbook and land up there. That's fine. I think that's right. And you call it a master stroke, but I think provided it is interpreted correctly, you know, that ambiguity that I pointed out.
I grant
I think that needs to be clarified. Are we talking of some other? Yeah.
Yeah.
Sir,
yeah, but if you look at it just as a matter of high-level principle, if somebody is able to show up at the door with the money, why not?
How long are you going to delay the plane, sir? You picked a beautiful analogy. How long will the plane stay grounded, waiting for some promoter VVIP to make his way to the door?
No, the plane. No, I think the plane, that is not in anybody's kind of choice, because the timelines in the bankruptcy code are pretty clear. So the plane will leave when it has to leave. But is there a last chance or not? And what is that last chance? How do you define that? I think that is there's an element of pragmatism and fairness in it.
Sir, just have a question specific to whether this entire sort of legal issue could come back to the Reserve Bank of India's doorstep. You know, the 1 year timeline that they have used to say that, you know, anybody who's been an NPA for 1 year would not qualify. That essentially is in keeping with what the RBI used to put these accounts into insolvency. That was also, you know, accounts which have been overdue for 1 year and 60% of it are NPA were put into this. That was challenged, I think, by SR. Then that did not hold. If this whole legal process begins again now because of the amendments, could all of those sort of technicalities come into question as well, as to how that 1 year period was decided, why 1 year, why not more than that, and you know, many other such technicalities?
I think, but I have not studied, because I've literally seen it a few hours ago, so I haven't studied that, but potentially, yes, some of these questions could arise, but I'd like to apply my mind to it a bit more.
So, Shroff, for the, you know, for
so
the
this
large
is exactly
guys,
the sort of what I call the unintended consequences that need to be digested first.
Okay, so for the large assets, I suppose you will find a bunch of bidders. But what about for the small and medium-sized assets that are there? You know, if the promoter is not in the fray or is not allowed to participate in the bidding process for the small and medium-sized assets, do you foresee a situation where most of these guys will end up in liquidation? Do you see many cases going down the liquidation route?
Yeah, I think that's a fair point, because this presupposes that absent the promoter, there is sufficient competitive tension and interest in the asset. Whereas there could be situations, particularly the smaller ones, where the promoter may be the only person who is actually interested and nobody else cares about the asset. So that is definitely one problem. But on your second part on liquidation, I think the ordinance also disqualifies them from bidding in the liquidation as well. So they're out.
Oh, well, that's interesting. So
so it will be liquidated and then effectively dismantled.
Well, I have one final question then. I think you've expressed in your...
Yes, go ahead, Menka.
Yeah, no, just you've expressed in your first answer that this is more political messaging than commercial sense. I get that very well. Do you think this was the moment in India that we needed the political message more and that should lead the process? Because for too many years now, promoters have managed to get away with, I won't say gaming the system, but playing with the system, toying with it. Or do you believe that no matter what the excesses were by promoters, commercial wisdom should have always reigned first?
Yeah, I don't want to pass any moral judgment on it. Yes, I think it's a strong political message. And if we were to think of this last window, you know, catch the plane before it takes off, as the commercial mitigant to the political message, it may be actually a good balance of strong political messages showing the will of the state and the determination to get this resolved, and at the same time temper it with one last chance. One last chance properly defined.
I have one 30-second question to ask you. How many promoters called you between yesterday afternoon and this afternoon, Mr. Shroff? How many have been able to quickly raise funds in the last 24 hours?
Zero. I'm not taking calls. The only call I took, Menka, was yours.
Well,
the only call I took was yours.
I can tell you I have zero loans. But Mr. Shroff, I have no doubt your phone's going to be very busy through the course of this weekend. Thank you so much for finding the time to join us this afternoon.
We are positioned in this entire bankruptcy space. We are positioned more on the, as a firm, we are positioned more on the creditors side and potential purchasers, and it's a decision we have taken now. But that being said, as a bankruptcy professional and as a practitioner in this space, I think I'm interested in seeing clarity. I am not interested in seeing ambiguity, because ambiguity will actually kill the very purpose for which this has been designed.
All right, we'll leave it there, Mr. Shroff. Thank you so much for joining us this afternoon and for adding, more layers of interpretation to this story, which will be fascinating.